Liz Peek, it's the delinquencies that should be concerning to everybody because people ran up their credit cards and to keep up with inflation and now are struggling to make those payments, particularly on their car loans.
Car loans and credit card debt, which is, after all, interest rates above 20%. That's pretty horrible. And I think the amount of credit card debt per person now is over $6,500. That's a lot for Americans to be carrying with that kind of interest rate. But what spooked everyone last week, and we have to consider that the odds of a 50 basis point cut went from like 2% to now 65%, literally in a matter of a couple of days. I mean, it was like, whoa, there's new information. The Fed is going to have to look at the new information. What was that new information? It was Ally Financial. Some other companies came out too, but Ally came out and talked about delinquencies on car loans going up, how the write-offs were more than expected in July and August. So this isn't like in the future. This is now and in the past couple of months. Obviously, we've had a softening job market. That is probably the number one thing that would make consumers skittish and unable to pay their debts. So there's kind of been, you know, while everyone now, literally everyone is expecting a soft landing on Wall Street, now all of a sudden there is this sort of steady drumbeat of slightly worrisome news. And that's where we are.
And so another key point that you just made is that when you see delinquencies on car debt, it's a real problem because people need their car to get to work.
People do not want to default on their car loan because they need it to get to work.
Right, it's how they pay the bills. So, all right, so let's say there's a rate cut coming. How long does that take before the people that are suffering under these problems start to feel any salve?
Well, that's why there are a lot of people who think that the Fed has waited too long because it can take 12 to 18 months to have changes in interest rates really impact the economy, right? There's a tremendous lag. Where does it show up first? It'll probably show up early in housing. Housing's sort of a disaster right now. Definitely lower interest rates, so end up with better demand for mortgages and people being more able to afford housing. Housing is more unaffordable than it's been in 40 years, so that would be a real relief.
Or it could have the opposite effect, that it juices prices even more and it prices people out.
Yeah, maybe.
So you get an offset, like maybe lower rates, but it juices prices, and so the affordability.
Well, if you let in 10 million illegal aliens into the country, that'll solve your housing problem. Okay, moving to this. Joe Biden, Kamala Harris, and their minions driving the economy into the ground want you to think that America has made a full economic recovery. But your latest piece, Liz, warns a recession could be next month's surprise.
Well, there's usually an October surprise, right? What could be I mean, obviously there are a million things that could happen. But again, talking about consensus, the consensus has now moved so firmly in the direction of a soft landing. And in fact, just minutes ago or an hour ago, the New York Times has a story out saying it's never happened. I say that in my piece. It has literally never happened that the Fed has raised rates to squash inflation without completely collapsing the jobs market. And what do we know about the jobs market? Honestly, not very much, because the numbers are just all over the place. The revisions have been hideous, so we just don't know.
I'm starting to think that the opportunity economy that Kamala Harris keeps talking about is the economy we have right now.
Yeah, well, it's an opportunity to get better, maybe.
Well, what they lie about, well, one of the myriad things they lie about, manufacturing's been in a recession for almost 2 years. Manufacturing economy has lost 130,000 jobs in the last year and a half, despite them spending, deficit spending of $3.5 trillion.
Well, that's the other thing, Dagan, that no one's talking about. Our economy should be on fire, not kind of approaching stall speed when we're spending $7 trillion and we have these $2 trillion deficits. Well, what do we do if we get in trouble? Well, I don't know.
It's because government sucks. Government sucks at spending money. The private
News
sector,
alert.
The private sector does a great job at it. Sorry to use that word in front of you, Liz.